All right, folks. I don't really have a lot to go over today, but I did want to hop on and just kind of look and see what the performance was like for these scripts I created over the last 2 days for ES for futures. So, let's do this. Okay, this is today. This is on the 1 minute time frame. Like I said, typically when I'm looking at futures, because market hours are the 9:30 to 4, that's what time I'm really referencing when I'm looking at my scripts. I don't know why this always acts funny, but from the 9:30 to 4 time, it's in here. And the script that I created the 2 days or so ago that we've been talking about a lot is the one with the green cross. And then the green cross, it worked here, and I made profit. I think I exited right in here. I made profit. I made $100. All right. And then I proceeded to trade myself again. I don't do as well as these indicators do. So maybe that's a lesson I should learn. But anyway, so I made $100 here, and then I tried to trade a few more times, and then I lost it all by the time I got down here and somewhere. Anyway, I pretty much use as much as I wanted to use, and I hit my max daily limit. So I went and played some video games, and then I came back, and I was like, all right, well, when I came back, I saw that this indicator here, the green cross that worked for the prior 2 days, wasn't working on this day. And that's just the breaks. That's how it is. Nothing is going to work all the time. Like I said, if it did, then we'd all be rich or something. Anyway, so I decided to make a new script. So I made this blue one here, and it looks like this. Dun, dun. Dun. Looks like this. This is, ES dip for 1228. So it looks like this. I did some conditions regarding volume. So I wanted it to be a bearish candle. I wanted the volume to be fairly low. I wanted there to be multiple bearish candles. So one bearish candle followed by another one, followed by another bearish candle. I wanted condition 24 to be met. That's the bearish candle. And then I wanted the bottom wick to be less than, or to be greater than half of the range of the full candle. No, actually, that's a negative one. I wanted that not to be true. So the bottom wick could not be greater than 50% of the range. And then what else? Obviously, the time conditions, so not the after hours stuff. And that the body of the candle had to be less than the average true range of 7 candles, right? So we don't want a really long candle. And even if it was really long, we don't want the body to be really big. All right. Okay, and so with all those, like I said, it created these blue dots. And I like these 2 blue dots here on today. I haven't really even looked at it much. I created it, I don't know, probably 2 or 3 o'clock, and then I just walked away. So, that would give me an entry there, here, which is okay, because there is room there for profit. Little scalp, quick reversal. That one works good. And like I say, usually you'll find that it works well on one day, and then the following day it either doesn't work well on, or you have to adjust the criteria some more. It worked there. That's a great one. So I only got one entry on, for that specific one, I only got one entry on the day before. But you see that the green crosses the day before was, superb, with the exception of those. And that one. Okay. but we got one blue dot, which was a great entry. Honestly, if I can make a few indicators that will give me one entry each on, per day, and I have like say 5, then that'd be great. So on the day prior, on the 26th, we got an entry there, which is okay. Entry here, which is great. Entry here, that one's pretty good also. This one here is no dice. That one there is okay. So out of the 1, 2, 3, 4, 5, maybe one of them didn't work out well. So I'm okay with that. I'm okay with that. Okay, so we'll go back to the 25th and see how that one performed there. The got one that didn't do so well. 2, I don't like that one either. That one. I think that's the dot there. Yeah. So 3 didn't do well. That one was okay. That one was okay. So 2 and 3. All right. So it was a little less than 50% on that day. How about the day prior? Does that take us to the 25th, or that takes us back to last week? And so actually that would have been Christmas Day. So even though futures was running on Christmas Day, the markets weren't open. So not sure if that would have been a great time to execute trades on that day, trying to maintain that consistency. So the consistency that I'm looking for is that the market is open, that we're in between 9:30 and 4 o'clock trading hours with good liquidity with the regular institutional trading participants. And on, like I said, on a day like Christmas, you don't have the same participants because a lot of people are not trading. So I didn't even look at the liquidity. Liquidity may be there, may not, but I'd argue that the participants are not there. So anyway, even though it was less than 50% on as far as strike rate on Christmas, I wouldn't use that. I wouldn't use that data. And maybe I'm being selective, but I wouldn't use it. Okay, so there. All right, this one here works good. So we're back on last week. So this one here works well. This one works well. This one works well. This one does not work well. So we're at what? 2 and 3, 2 out of 3. This one worked great. So now we're 3 of 4. Okay, so 3 or 4 on that day. So that's about a 75% rate on that day. All right. This is the 20th, but this is the nighttime hours. Okay, so the 20th was a crapshoot. Look at that. That one may have worked, right? Put you at a 1 to 2. I don't love it. I mean, it kind of respects that, so you could use that as your stop loss. So that's why I would say that does work. This one does not work. 2 does not work. 3 does not work. 4 does not work. Well, actually, this one does work. And we got one stuck in here, which that one kind of works. So we'll call that 1, 2. 2 don't work. 3 don't work. So 3 and 3. And that one works. We'll call that 4 and 3. So 4 times it worked, 3 times it didn't. All right. All right, so that's just what I did today. Like I said, I put together that little blue dot one. Now, I'd really love to, and you see the green crosses here. Green crosses failed as well, right? So whatever happened on this day, it just blew everything out of the water. Green crosses didn't do so well. The blue dots didn't do well. It just kept flushing on this day. Oh yeah, that was the day. I think that was the day when I forget what happened on that day, but yeah, the market really just flushed that day and went through a lot of different. Yeah, it just went through a lot of liquidity zones and different price structures. So, I mean, using your stop loss for sure, but the rules were not respected on this day at all. So, and those are the breaks. You're gonna have some of those days, right? All right, but overall though, I think I like the blue dot. So, what I'll do now is I'll probably just hang out here for a few minutes, make another script on I'll just pick a random day and just make a script on it from scratch, because the more that I'm able to look at something and come up with unique ideas, the more likely that I'm going to pair unique ideas together and come up with something grand. All right, so I think I like this day. This is a nice kind of continuation, trend following day. This might have been the day that I started the green crosses on, because I mean the green crosses hits every single dip. I don't want to say I couldn't come up with anything better than those green crosses there on this day, but I mean, really, look at that. Yeah, let's do it anyway. Let's get rid of the dip. Yes. And I've done something like this before and then tried to come up with a better script, and it just does not work. Like, the next script is always like way less suitable. That's the wrong one. Da, 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 da. Da, 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 da. No, 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 no. No, 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 no. All right, so they'll do a show me new one. This will be for 12/28. Well, I already did one today earlier, so let's do dip 12/28 V2. Okay, that there. And I think I like to, because I know you guys aren't always interested in me just kind of going on. I want people to be aware what's going on. So let's do this. We'll drag this down here. We'll turn this on, just let you know what's going on here. And I'll probably put this thing on mute. If you have any questions or anything, put them in the chat. All right, so I think we're off to a pretty good. Now, hate to say start on this because I just been playing with it for a little bit, and I think it's looks pretty good. So we got this bar, we got these two bars, we got those. Of course, you always have to have some type of stop. So maybe this gets stopped out. Maybe you take that and move your stop loss up. You know, the next obvious area for a stop loss would be, you know, here. So like I say, you may get stopped out, or you put it here and you don't get stopped out. These look pretty good. They're right before a big move up. This is pretty good. You know, you set your stop under that previous area there. This, again, depending on how you play it, I think I typically would look for that next move up, whereas this is pretty close here to the supply zone, you know, created all through here. So, you know, it's you're really tight right here. You're really tight right here. So definitely get in, move that stop up as you get in though, because there's a high likelihood for a rejection there at supply. All right, there. Okay, I like those. I don't like that one. This one is okay. I don't like that one though. Oh, but we're already approaching 4 o'clock. So actually, we wouldn't have took this one anyway because I'm typically making my script so that they are not giving me entry signals or triggers. You know, 10 minutes till 4 o'clock. This guy here though, tricky one. I've got to. Well, I'll take a look at it. So I don't like this top wick here. So I need to put in some type of criteria that says that if you have a large bullish candle with a 1 or 2 candles following that has a wick greater than 50% of the range, then you don't want to take that entry. But that's how many candles away is that? That's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. It's about 15 candles away. And if we did that, it would probably, 15 candles away, probably exclude some of these other ones too. Maybe not. Actually, it doesn't look like it. So that's a little bit more of a complex script. I'm going to try to write it though. And then I will have done something that I haven't done just yet. That'll be new for me, coding. Not to say I can't do it. It's just that I just generally don't take the time to do these things. And I know that's what's going to set the difference. But anyway, so first let's get rid of the time issue. So the time has got to be greater. Time has got to be greater than like 9:35, and time is less than 15:45. What? Time is less than 15:45. Where are we at? 15:45. Yeah. Time is less than 9:30. Oh, it's greater than 9:35. You gotta love coding, man. I mean, tell you. All right. So, like I said, we need to. If we have a large bullish candle, so we need to look at recent occurrences. And we shall not have a bull, which is, so we're going to identify this candle, but we're going to do that next. The candle before shouldn't be a bull. So that's one candle before. And the candle before it should not have a range larger than average true range of 7 times 1.5 should do. And and that should be for the candle before. So the range of the candle before and we're looking for this to be all this to be true, and then we'll just say that it shouldn't exist. Okay. All right. So all these conditions we need to say and all these conditions need to be met. All right. So the candle before it cannot be a bull, or it's hard to say it all at one time. So let's put it this way. The candle before it should not be a bull, and the range of the candle before should not be greater than the average true range of 7 times 1.5. So, 1.5 times larger than, the average candles, average 7 candles, prior 7 candles. And that current candle, should not have a wick. So the wick, top wick, is greater than half of the entire range times the range. Actually, it's not that hard, but we'll see how it works when I get done with it. All right. Yeah, that just says that you got a long wick there. Oh, I'll put and range is greater than average true range of 7. And what that's saying is that this range here, because sometimes you're going to have this large bull here, and then you're going to have a small little candle with a little bit longer top wick, and then that would make that true because it's going to have a small body and a tall wick. That's not what we're interested in, right? We're interested in like this long wick up, right? So the whole range of this thing actually needs to be fairly long, as well as this one is fairly long. So that's just what that says. All right, and then we got to do the comma. And all right, so it's test length. I said we're going back 15, which is kind of crazy, but All right, 15, and then test length was the first instance, and then the flag. All right, so that will give us a value, and that value there should be no value there. There should be no finding of all these conditions being met, because if we do, then we've got this guy. So the value of value 5 should be -1. So value 5, we'll just put that it's less than 0. Okay, and boom. All right, so we got rid of that. Did we keep all the other ones though? Yeah, we did. Okay. All right. Yep, I mean, that's pretty much it. So we got rid of that one. So like I said, being able to put that piece of code in just says that you didn't have a huge run up on, in an exponential move, and then a rejection at the top, and now you're just kind of consolidate. You're after that period, because that's what happened, right? We had an exponential move up because we had a bullish candle, and it's way longer than all the rest of them. So it's either an exponential move or it's a breakout. So we had that huge run up, and then we had a long candle with a long wick, right? And I didn't say if that was a bear or a bull. I don't think it matters. If it has a long wick at the top and it was after a long bullish move and everything before it had smaller ranges, then that's probably extended. And everything after it is probably a consolidation phase. Now, whether it's a distribution phase to break down or whether it's an accumulation phase and then a move up, I don't know. I don't really care. All I know is that it's not still trending. It's not trending, and it's yeah, I mean, I think that's the main thing, is that it's not trending, and it's at the move. It's within striking distance of a volatile situation. Okay, all right, so that's all I'm gonna say about that. Now that kind of thing, if we were to just take this out, that would probably be great for, or just reverse this, make this a bear instead of a bull. That would probably be great for finding reversals. All right, but for right now, we got all those yellow dots. 2 o'clock. Didn't work so well on this day at all. On the other scripts that I use, I said that there had to be multiple red candles already, or multiple lows, and I think I like that, because I mean, we are getting in some pullback ranges here, but this is not clean. But this is not a clean chart either. This trading day was not clean at all. Oh, okay. Well, this is the 22nd, right? So if you look down at this, is the 22nd. What happened on the 22nd? Yeah, it worked pretty well for that one day, trending day. So we're above the 200 EMA. How did it fare on this next day? All right, so it caught that pullback, caught that little dip, caught here, caught here. Not so great, not fantastic. Yeah, so, and this is another one of those where I would have imagined that this line would have prevented you from getting in, but I believe because this bar is a little bit shorter, it didn't catch it. Okay, well, at least I played around with adding that extra bit of logic to the chart, because it'll make it that much easier for me to incorporate on the next go round. I mean, it's getting some of the dips. It's just not, it's not deep enough. These dips aren't deep enough. They don't leave enough, for me, they don't leave enough risk to reward on. And then, you know, I don't like these. So regression. Regression. Close, close. Close, close. I mean, that one's okay. This guy. Let me see. Get that turned down. Okay. Well, I'm going to cut it loose there. And the scripts that I made the last 2 days, though, they have been, you know, great. This one here, I don't like this one as well as I like the other ones. All right, so if we were to add the other ones back to the chart, was the dip 1228, which are the blue ones. And the yellow ones, you know, they're holding their own. And then the dip ES. So we get those green crosses. So actually, the yellow ones are definitely holding their own compared to the green crosses. The blue dots, even compared to the blue dots. I don't know what happened on 1222 why it just looks so funky. Alright, so blue and yellow, blue, yellow, and green, they all kind of called this same shot. And then, you know, everybody got stopped out. The greens showed back up. The yellows found their way into that dip, which is very cool. Yellows did not show up in this area. The green crosses did. But actually, I'd probably say, just kind of looking at it, looks like the yellow dots, yellow and blue, yellow. Yep. The green crosses really showed up on this day though. Blue. Got multiple opportunities with the yellow. Yeah, I mean, actually the one I made today is not bad. Gave me a lot more, would give you a lot more trading opportunities, but they're not all like the blue ones, the blue dots. They mainly seem to show up when there's a lot more meat on the bone. The yellow ones, there's a lot more meat on the bone here, but there's a lot of other places where the yellow ones show up where there's just a small amount of profit to take. So the yellow ones give more trading opportunity. The blue ones seem to give a better risk to reward. The green ones just seem to, well, you know, they're just hanging out. They're neither here nor there. But okay, so the yellow ones are, this is not a throwaway script. Okay, I was about to throw it away. But anyway, the 22nd, though, I don't know what happened on the 22nd. And I'll look it up. Not right now, but I'll look it up. Just to see what in the world happened on the 22nd. And why none of these scripts seem to work well on the 22nd. Go to the 5-minute time frame. 22nd. That was here. First, so there was a run up the 21st to the end of the day, a huge run up, and then after hours we kind of did a little saucer, not a saucer in the handle but a saucer, and then first thing in the morning, just prior to market open, it ran up really high, and then during the day we kind of had to sell off back through the after hours. Yeah, nothing's jumping out at me. At 2 o'clock we have increased volume and we have the flush. Yeah, that was the day. Oh, that was the day that there was something about the Russian war, something war, something. Yeah, and then we had that flush back up. So I wouldn't say that explains it, but maybe there was something else going on that day. And I mean, there wasn't a, I don't know, even prior to it, boom, that was okay, that one's not okay, that one's good, those were okay, that one's okay, that one, but not bad. So really it's just two that's not good. That one and that one. Two, and then you got this one, which all of these indicators picked up that that should have been an entry, right? So, and then, so you missed that one. And because they all picked it up, I'd probably say that that was probably a pretty good entry, and it just didn't work out. And then it caught this one at the very bottom. So I'm gonna say even the 22nd, I'm gonna say this yellow one is hit. The yellow one is on fire. So I'm gonna leave it at that. And yeah, come back and hang out with me when I get ready to do the next live, and hopefully we'll come up with another strategy that that breaks the bank in a good way. All right, it's me. I'm Eric. I'm out. Peace.